Let's bring in former Atlanta Fed President Dennis Lockhart. Dennis, it's great to have you on the show. I do want to start with all of this data we've gotten this week that has been so much weaker than expected, including so much of this labor data. Are you surprised to see that we're starting to see this shift? You're starting to see this turn where the labor piece of the puzzle is concerned?
I can't say I'm surprised. And I think in many respects from a Fed committee point of view, it's a welcome development to begin to see the labor market get moved toward balance, I guess is the way I would put it. Today's claims information and the revisions, that was a bit of a surprise. Revisions are always a little bit of a surprise. But at the same time, I would not overreact to this. I think it is the beginning of a tipping point or a breaking in some of the trends we've seen up till now. And the Fed will take it on board, but not necessarily view it as conclusive.
Yeah, and of course, we're getting another inflation reading next week. We get CPI next week, too. How does this position the Fed for the possibility of a hike versus a pause at the next meeting? And I ask that given the fact that we have seen India and Canada and Australia this week all hold pat and in some cases actually surprise the markets by doing so.
Well, I think the matter that is most important in the question of whether to hike by 25 basis points at the next meeting or pause is really credit contraction. And therefore, the series like the senior loan officer series, which normally is not given a lot of attention, those series of data are really important, I think, now, because that's the critical factor. If they think they are getting serious credit contraction, there could be a leaning on the committee to pause. But in my opinion, they're not going to have a lot of evidence or a lot of convincing evidence by the early part of May.
In terms of that data, we did get that Dallas Fed District survey, a survey of 71 banks, that has shown that since SVB went under, we've seen this dramatic reversal in loan volumes in that region of the country. And I say that knowing that we don't have a lot of this data in real time, but how quickly could we see this potential contraction? And how long does it take that contraction to make it out into broader economic data?
Well, the first part of your question, I think you could see it very quickly. I think banks are already probably adjusting their appetite for risk and for certain kinds of loans. They're, like all markets, anticipatory, and they're anticipating that the broad economy might, in fact, begin to weaken pretty dramatically. So they're probably taking action at this time. How long can it take? Well, I think that could take a little bit longer. There's lags, of course, in the use of credit lines, the availability of credit, actually constricting activity. But I think by summertime we'll know whether SVB has produced a credit contraction.
So is it fair to believe, and we've heard a number of Fed officials in recent days suggest as much, that this banking crisis will do some of that work, that tightening work for the Fed?
Yeah, I think that's on their minds. The question on my mind is if they base it on data and they base it on hard evidence, how much will they have by May 2nd and 3rd? And as I said earlier, I'm questioning whether they'll have enough convincing evidence by the next meeting to back off an otherwise, let's say, likely 25 basis point hike.
The flip side of this, and the markets have certainly been grappling with this week, is this notion that maybe perhaps we're starting to see a hard landing path emerge as the data does begin to turn. How real is the risk of stagflation here?
Well, it's hard for me to see a stagflation scenario. I would distinguish that from a hard landing, which would just be a recession, and a recession probably with, not bad employment situation associated with it. But this is a very difficult path that the Fed is navigating at this time, because when you add the credit contraction potential, you have something that is adds to uncertainty and is rather hard to gauge. That will take a few weeks, or if not months, to play out. And so the chances of overshooting, I think, are just greater than they might have been 4 or 5 weeks ago. And therefore, the chances of a hard landing have to have increased.
Dennis Lockhart, thank you for joining me today.
Thank you, Morgan.